Snipers, you have to see what's happening to the Bitcoin price this Wednesday as we saw a garden variety retest of the 20-week moving average yesterday at 40,700, allowing us to get back above 41,950 despite seeing a full 4-hour candle close below this level. And now we are trying to get back above 43,000 where we have the weekly open. This is the major resistance within the range of 44,800 and 41,950 that we want to get above to assume some upside for Bitcoin. And of course, if we can get above 43,000, now we have 44,800 as the major resistance for Bitcoin. But until that happens, remember, when there's light volume, the path of least resistance is always going to be sideways to a little bit higher. And so since we've yet to see some real volume come in, we're seeing some sideways price action, and that is allowing altcoins to also breathe if we look at Ethereum. But today I want to talk more about the revolving parts outside of the cryptocurrency market that affect the cryptocurrency market, like the S&P 500 seeing a massive drop and rejection of the 50-day moving average back at the 100-day moving average. This is actually the first time that we've came down to test the 100-day moving average, going back above the 50-day moving average and now coming straight back down to the 100-day moving average. Notice how every single time in the past that we've come down to this 100-day moving average and have come back above the 50-day, we've stayed above the 50-day. We've come and we've tested the 100-day moving average multiple times, but every single time we get back above and we continue to move up. And now we're seeing the storyline change with a rejection of the 50-day moving average, the first retest of the 100-day moving average for this year, and now we're back at the 100-day moving average at 4370-ish for the E-mini futures contract. And we know the S&P 500 is extremely correlated to Bitcoin. Why is this happening? Well, guess what? The DXY, notice how it's testing the most important resistance level. And the strength of the dollar is a highly correlated asset to Bitcoin dominance. And it also, of course, is a indicator of asset prices being sort of inflated. If the dollar is going up, we're going to start to see the S&P 500 and the cryptocurrency market come down. So the fact that the DXY is pushing up right now is the reason we're seeing weakness in traditional markets and in Bitcoin. And so we really want to start monitoring this. And then we're going to also look at how altcoins are reacting, as well as international markets, because look at Japan also reacting to the DXY, pushing down 2% today. And of course, Bitcoin has been maintaining itself within 44,800 and 41,950 for quite some time now, but we've yet to really see decisive volume. On the 6-hour chart, which we know is an institutional time frame, the sellers are clearly in control. There's a lot happening in the markets today. I want to talk about exactly what I'm expecting here for Bitcoin. Now, first and foremost, because we are above 41,950, we want to go into the smaller time frames to look at the market schematics. And notice how we came to form these lows on the 24th of September, where we came down to 40,675. And then we came back down to form another low at 40,750. But this time our low was at 41,760. So we're continually forming some higher lows for Bitcoin, which is a positive thing. But the fact that we've come below 41,950 so many times now, especially when we first came down and wicked below this level, tells me that we've cleared the order books and the volume in this range. And so at any point in time, if we start to see weakness at 41,950, the chance of Bitcoin slicing down below 40,000 becomes higher and higher the more we come down and test levels below 41,950. So at this point, we can assume that there are two extremely important levels to watch right now. And the first one is going to be 41,950, of course, but now the second one is going to be 43,100-ish, where the weekly open sits. Because if we can get above that, now we can buy ourselves some more time to see some higher prices, maybe some more sideways price action, and then to potentially come and retest 44,800, where depending on how that goes, we can talk about potentially assuming some more upside targets. But remember, I can't say that there's going to be a short-term bottom just yet, based on the volume on the 6-hour chart, because until we see volume equate to the amount of sell pressure that came in on the 6th of September when we saw the 19% drop from 54,000 down to the $43,000 range for Bitcoin, we are not going to be able to assume there's a bottom because there just isn't as many buyers in the market as there are sellers, right? So that's really what I'm monitoring to assume the short-term bottom. But if we go on the daily chart, notice how we are still inside of the range of 44,800 and 38,000 because the daily candle is sitting still at that $41,950 level and has a body below it. And so the reason we came back above 41,950, even though we saw a 4-hour candle close yesterday below that level, is because we saw a garden variety retest of the 20-week moving average where we could expect to see some upside pressure since there wasn't enough sell pressure to bring us down further, right? So we're at a very sensitive point for Bitcoin. Now, here's the thing that also matters on the weekly chart, which the macro, of course, is the most important thing, right? Traders can control the short-term price action, but they can't control the macro price action. If we get below this 20-week moving average at 40,500, that's a big deal because now we've confirmed that we are not seeing a reversal of this bear market. Now, take that lightly because if we assume that we're still in a bear market since we topped out at 64,000 for Bitcoin, that means that we're closer to the end than the start, right? If we can assume that maybe the rally that we saw to 64,000 was the first phase of this bull market, then now we can say that, okay, the bear market is already in progress. We're probably closer to the end than the start, but there's still a lot of potential downside that could potentially come on the table for Bitcoin, and maybe not enough downside to justify Bitcoin coming down below its previous all-time high of 20,000 because Bitcoin has never done that once it's broke an all-time high. So that's why I've been saying that in a more macro view, and there's a lot of lines on my chart right now, but in the macro view, I believe that institutions are eyeing this level where we have this 100-week moving average, and we also have confluence with a major market structural support that dates back to the crash from March 2020 that held us at 10,000 US dollars, and we've yet to come test this support level. Remember, institutions always want to accumulate at the best possible prices. And so what they'll do is they'll drive price down like they did from 64,000 down to 30,000, and then they drive price back up to either form a lower high or a higher high, because when they drive price up for that second time, it puts more enthusiasm in the retail traders saying, oh, we're back in the bull market, we're going to break new all-time highs now, and then they start to pull the rug on everyone and drop the price. And because everyone is so enthusiastic, people start buying these dips on the way down, and that gives the institutions the opportunity to, at one point or another, throw a ton of sell pressure into the order books and get the price they want to get their accumulation in. And so that's why I'm very cautious right now where Bitcoin's sitting at 41,950. We really want to always think like an institution, as we always do here in the Cypress channel. And so that's a little bit of a market macro recap that is pretty significant at this point, being the fact that Bitcoin is below its weekly open. And of course, if we can get above 43,100, we can start talking about some upside targets. And when it comes to the revolving parts, we're going to cover traditional markets and commodities and international markets. But I quickly want to just talk about Ethereum here. We're seeing Ethereum also show some sideways price action. That is nothing to be surprised about. Sitting at 2,900 right now, still below the weekly open. We could still assume that we're seeing weakness with the Ethereum to Bitcoin chart, being the fact that we are really close to 65,000 Satoshis, which is a major support level. But what I really want to talk about today, outside of, let's say, Bitcoin dominance and the altcoin dominance, which we know Bitcoin dominance is possibly in its early phases of reversal, while the altcoins outside of Bitcoin are possibly in the early phases of a downward reversal. And so knowing that, why is this happening? Well, the DXY is the big culprit here, right? The reason we're seeing this downside price action right now is because of what's happening to the DXY pushing up. And so if we continue to push up 93.82, we're already above this major resistance. This is going to potentially push this DXY even further up. And this move right here is what would be extremely concerning for the S&P 500 and the cryptocurrency market, because that move to the upside, when that happened in 2017 and 18, what did that do to the cryptocurrency market? Well, it bled out the overall total market, and it also bled out altcoins back into Bitcoin. So Bitcoin was the asset that saw the least amount of downside, while altcoins bled out, and the Bitcoin dominance chart followed the DXY and continued up. So if the DXY is pushing up right now, why wouldn't we assume that Bitcoin dominance is also double bottomed and ready to get above its 20-week moving average, which it's yet to do so. And that tells me that because we have yet to get above this 20-week moving average and mimic what is happening with the DXY, that we've yet to see the real downside move for Bitcoin. And so that's what I'm monitoring right now. The DXY is pushing up. It's causing the S&P 500 to push down. And that's a big deal because S&P 500 is extremely correlated to the cryptocurrency market. It's just, that's how capital flows. If there's fear in traditional markets, there's also going to be fear in the cryptocurrency market. So we want to watch the S&P 500 testing this 20-week moving average, coming back down to this 100-day moving average. And we're already seeing the effects of the DXY take part in international markets, with Japan down 2% today. China's coming down right now. And even the Euro 100 followed the S&P 500 coming down. It's actually below the 20-week moving average now for the first time this year. So a lot happening right now. Remember, the path of least resistance is always going to be sideways to a little bit higher. So when we see these, pumps to the upside, we can call them minor pumps, we have to always take them with a grain of salt unless we break major levels like the weekly open, or if we can see some volume that can justify a possible short-term bottom. So thank you all for tuning into the Snipers channel today. I hope you enjoyed today's quick analysis. I appreciate each and every one of you guys. Remember to smash the like button for the YouTube algorithm so we can hit 100,000 snipers on this channel. And until next time, snipers